Hi, welcome back. We're going to start chapter 2 now. And as I said in my previous set of videos, this may be the single most important chapter. We certainly have to learn everything in all the chapters. Everything's important, but this is truly foundational. This is kind of the nuts and bolts of accounting. So what we learn here, we're going to carry forward with us. Okay, so here are our course objectives. You can review those. We'll be going through them. We're going to learn, first of all, what an account is. I introduced this in chapter 1 in one of my videos. We're going to go back to that document. I had begun an Excel document. We spoke about the accounting equation, which is assets equals liabilities plus equity. We defined each of those elements, assets, liabilities, and equity. And I started to give you examples of each. What accounts are assets? What accounts are liabilities? What accounts are equity? Those are things we have to really commit to memory in this chapter and take forward with us. An account is really a detailed listing of all the ups and downs of a particular item. So let's take the account of cash. We learned last time, and I will go back to that Excel document. Here we go. Cash is an asset, right? So every time we put cash into the bank or we collect cash from a customer, our cash goes up. So in the cash account, we would record each of those increases with the date and the amount of the increase, and then what the new balance is after that increase. Likewise, we'd also record any decreases in cash if we're paying a bill or paying salaries, so on and so forth. We would record those decreases in cash. The cash account would capture all of that activity in date order and would give us a balance after each particular transaction. So that's really what an account is. We started talking about the various accounts last time in chapter 1. What I've done here, we're going to continue. So under asset, we spoke about these before. I'm going to label these two. These are our liability accounts. I'm going to just make some adjustments. So over here, number 7, I had office supplies. I'm going to call these, oops. I'm going to call these prepaids. The prepaids are assets. I'm putting a colon there because I am going to list the prepaids now. These include office supplies. So the office supplies I had listed earlier are a form of a bigger type of asset called prepaids. Office supplies, prepaid rent, and prepaid insurance. Those are some examples. Most of them will have the term prepaid before them. So prepaids are the broad categories, and these are 3 accounts under prepaids. So let's talk a little bit about prepaids, because it's going to be very important that we understand how they operate so that we record any transactions involving prepaids accurately. So prepaids are assets that we pay for in advance of use. So let's start with some of the easier ones. I think it's easiest to talk about prepaid rent. So if I am an ABC company and I rent space, office space, so that I can conduct my business, and I move in on January 2nd, and my rent is $1,000 a month, and on January 2nd, I just say, oh, I don't feel like writing a check every month. I'm going to pay for the first 6 months in advance. So if I write a check for $6,000 to my landlord on January 2nd, that is in effect prepaid rent. I am paying in advance of spending time in the offices. Okay, that's an asset because I'm paying for an advance and I have the future use of those offices available to me because I prepaid for them. Same thing with insurance. You could pay for insurance ahead of time, and I could pay for insurance in January, and I can pay for coverage that will extend through the end of the year or through March or whatever the timeline is. I'm paying for the insurance in advance. Also an asset. Office supplies I mentioned in my last video. I didn't designate as a prepaid, but it is in fact a prepaid. When you buy office supplies, your pens, your pencils, your ink, things like that, you are buying them brand new. They're available for you to use now, but you have not used them yet. So when you buy them, the cost you pay for them as they are brand new and put into a supply closet, those are also prepaids. Keep in mind that we are going to consider the effect as time passes and we use up some of this prepaid benefit because of the passage of time. Like we spend time in the office, right? January through June is now over. January through March is over. We use some of those office supplies. We're going to learn how to account for that type of activity in Chapter 3. So just keep that in the back of your mind. That really describes prepaids. That's something new we're discussing now in Chapter 2. They are, however, all under the asset categories. So get really familiar with this list right here. So I also have a new category under liabilities, and those are called accrued liabilities. And those accrued liabilities would include accounts such as salaries payable, interest payable, rent payable, taxes payable. So these are all accounts. Accrued liabilities in general are amounts that we owe because something has been incurred. An expense has been incurred, but we have not paid it yet, so we owe the money. For example, let's look at salaries payable. If I pay my employees every other Friday, and it is my fiscal year ends on a Wednesday, well, I have to capture Monday, Tuesday, and Wednesday, the time they work, that I owe them that salary, even though they won't get paid till the Friday, right? So I have to record that those are salaries that I owe. Same thing with interest. We'll look more into that as we look into our notes payable. Rent payable, same thing. Maybe I didn't pay my rent in advance. Maybe I owe it for time I've already spent in the office and I haven't paid it yet. Taxes payable is another thing. I have earned money and then at the end of the year I calculate my taxes and that's money I owe. I have a couple months to pay that. So accrued liabilities represent monies that are owed. They're yet unpaid, but they are owed by a corporation or business. I also stopped recording just so I could adjust this file a little bit. I made some space between revenues and expenses and dividends because revenue is an overall heading, and the account we will see when we do our what's called journal entries is titled service revenue or sales revenue. Okay, we'll see sales revenue more in Chapter 5, but that's the type, those are the revenue accounts. So much like I did with the others, I am going to put a colon here so you know that these are the revenue accounts, right? Expenses also have specific accounts. So everything we do, money we spend in business is an expense, or money that we incur. The appropriate word is truly incur. So salaries expense is an account. Rent expense is an account. Utilities expense is an account. Okay, those are all accounts. So you have, under retained earnings, you have broad category, right, of revenues. I'll just leave it like that. You could have service or sales revenues. You have expenses. There are many more expenses. These are just some examples. And then we get down to dividends. So I guess I will number these so that you can see the categories. Okay. So if we go back to our slides, this is a list. Remember I said keep a list so that you're familiar with what's an asset, what's a liability, what falls under equity, and you're going to see why very shortly. I'm going to end this video here and begin another.